The Fed held rates and projected one cut this year, but crypto traders are betting on a relief rally. The Federal Reserve held interest rates at 3.75% on Wednesday, exactly as markets expected. The dot plot now projects just one quarter-point cut for the rest of 2026, down from two cuts projected in December. Bitcoin dropped 4.6% to $70,711 in the 24 hours surrounding the decision. Ethereum fell 5.8% to $2,291, and the Crypto Fear and Greed Index sank to 33, firmly in fear territory as of March 19, 2026. None of that stopped crypto traders from calling a bottom. One cut, higher inflation, and a Middle East asterisk. The updated summary of economic projections tells a hawkish story. The Fed raised its headline PCE inflation forecast for 2026 from 2.4% to 2.7% and core PCE from 2.5% to 2.7%. GDP growth was nudged up to 2.4% from 2.3%. Unemployment stayed pinned at 4.4%. The policy statement added new language acknowledging geopolitical risk. The implications of developments in the Middle East for the U.S. economy are uncertain. Chair Jerome Powell, during the press conference, was blunt about the forecasting environment. "If we were ever going to skip an SEP, this would be a good one because we just don't know," he said. Powell also pushed back on stagflation comparisons. "That's not the situation we're in. We actually have unemployment really close to longer-run normal." But he conceded the labor market carries a feel of downside risk, describing it as a sort of zero employment growth equilibrium. The vote was unanimous. CME FedWatch now prices in roughly 100% probability of rates staying unchanged at the next meeting. Why traders see a bounce, not a breakdown. The crypto sell-off started before the Fed announcement, not after it. Bitcoin was already sliding on Tuesday as equity markets weakened. The S&P 500 dropped 1.4%, the Nasdaq fell 1.4%, and the Dow lost 1.6%. WTI crude oil surged 5% past $97 per barrel on Middle East tensions. By the time the Fed confirmed what everyone already expected, the damage was done. That is exactly the pattern traders are betting on. Sentiment data showed the social media discussion score for the Fed decision jumping from 9 to 71 after the announcement. According to the analytics firm, traders are expecting a bullish relief rally in spite of no changes, because the worst price action had already occurred. Crypto trader Mustache was more direct. "What you'll see in the coming months is a massive rally." Matthew Hyland added that crypto will see a significant rally once the stock market finds its low. Not everyone agrees. Willy Woo warned of a potential bull trap forming, cautioning that the current bounce could be short-lived. The numbers behind the fear, the 24-hour snapshot as of March 19, 2026, paints a uniformly red picture. BTC, $77.11, 4.6%. ETH, 2,091 ons, 5.8%. SOL, 89.91, 4.5%. XRP, 146.44%. BNB, $650.2, 3.3%. But the 7-day view tells a different story. ETH is up 8.35% on the week. XRP gained 7%. SOL added 5.85%. The daily sell-off looks like a pullback within a broader recovery, not the start of a new leg down. Fear and greed at 33 is historically a zone where reversals begin, not where sustained drops accelerate. The last time the index hit similar levels in early March, Bitcoin rebounded from the low 60,000s to above $75,000 within 2 weeks. What actually changed? Very little. The Fed confirmed what futures markets had priced in for weeks. One cut instead of two is marginally hawkish, but the inflation forecast revision is driven partly by tariffs and energy costs, both of which Powell characterized as a series of shocks that interrupted progress. If those shocks fade, the Fed has room to cut more aggressively. Producer prices in February rose 0.7%, double the forecast. That is the kind of data point that keeps rate cuts off the table for now. But it also means any cooling in inflation data over the next few months would give the Fed cover to move. For crypto holders, the practical impact is zero. Rates did not change. The balance sheet is still shrinking. The dollar index held above 100. The macro backdrop is the same today as it was yesterday, with one fewer source of uncertainty. Morgan Stanley's take after the meeting: the decision delays rate cuts but doesn't deny them. That framing captures the mood across both equity and crypto markets. The question is not whether rates come down, but when.